What I'm hearing you say is, first and foremost, there has to be some sort of income that is coming your way.
Yeah.
By the time you're talking about this pyramid, this pyramid is where you take a portion of your income to then the order in which what needs to be fulfilled by the investment. Mm-hmm. So for example, if I'm earning 100,000,
yeah.
you're saying I need to first and foremost take a portion of that income, let's even give an example, 20,000,
yeah.
and put it into a place where, if or not I have this income, I have food. That was the first element of the pyramid. Am I right?
Yes.
So then the second one is now where you can be like, there's some things that I liked in my life. So still from an income, whether that income is a salary, whether that income is from consulting, it's regular or not, investment is taken from active income or from another sort of income to create a sort of passive income. Am I right?
Yes.
Okay, I just wanted to make sure that people have understood that income is not even, we're not even talking about that.
No, that's a given. You have to have an income.
Yes.
Like, as soon as you graduate, as soon as you finish school, if you're going to a technical school, as soon as you get to 18 years, please look for an income. As soon as you can. Even at 15, if you can find a way to earn an income, that's the first thing you need to figure out. Yeah. How can I earn an income? Because it's from your income, then you invest. Even if the income comes once in 3 months, you need that money to be able to put aside so that your assets do 3 things. We've talked about 2.
And again, to interject and just make you understand, bring this back to Oak, we do have Oak clients who are in university.
Yes, we do.
Yeah, okay. So this is not limited to investment at 80 or 50. Okay.
This is for everybody.
So first one again was?
Your basic needs.
Basic needs?
Yeah.
Second one?
The second one is your psychological needs. Okay. Yeah, your need for belonging. You need to be able to meet your current standard of, to meet your current standard of living for the foreseeable future. So that then you're not taking your children to a certain school. 5 years from now, things happen and then you have to move them to a different kind of school. Or you have to move from where you're living, maybe a 3-bedroom apartment, you have to move to a bedsitter because you're not able to sustain your current standard of living.
Okay.
The third thing your assets must do for you is give you an opportunity to create wealth.
Oh.
Yeah.
Okay.
Because I strongly believe that we all of us, have a reason that we were created and a reason that we are here. We're here for impact. And all of us are impact in different ways. We're here also to enjoy life, right? Mm-hmm. And you need a level of wealth to be able to impact and to enjoy life. We can't just be at the basic level from the day we're born to the day we die. I don't believe that. I think that we all should get to the level where we enjoy a certain level of wealth. And of course, that will look different for different people, right? So what is wealth for me might be something that is nonsensical for someone else, okay? So
we don't all have to drive Bugattis.
Exactly, we're not all looking to drive Bugattis, okay? So I think the point is, what do we need to do to be able to meet some of the desires that we have? So, for example, I've met people who want to plant 1 million trees. I've met others who want to educate the whole, 100,000 children from their village. There are others who want to give to the church or give to ministry that is doing something meaningful, and they want to give a certain amount of money and things like that. There's different passions and pursuits that we all want, or we all have. And so for you to do that, you need a level of wealth. So the third thing your assets must do for you is give you an opportunity to create wealth.
I get that.
So now let's go back a little bit. What are we trying to do? At the bottom, when we're talking about basic needs, there is a risk that you need to be aware of. And that's your personal risk. Risk of health, risk of an accident, risk of salary not coming, personal risk. At the next level, it's market risk. Markets go up and down. Then there's inflation in the market. So I need to make sure that I invest to protect myself from markets going up and down, but also from inflation. But then at the next level, I want to make sure that I give myself the opportunity to make good money. 20%, no, what am I saying? Like double my money in 2 years, right? Where can I invest my money so I double my money in 2 years? So things like, now let's go into examples of where can we invest the money.
Okay, I like this. So depending on all these different factors, the investments change. The investment options change.
Yeah.
Okay.
So, depending on what we're dealing with, what is the goal or what's the need, your investment choice will be determined by the need. So I met somebody, we were being interviewed, I could forget the station, and there was a gentleman who came to give a testimony about how he had really made a horrible decision. He had saved 4 million shillings. He had done really, really well, and he had saved 4 million shillings, and his friend whispered to him about a certain sacco that the guy was making, I can't remember now, it was like 20% return every few months. So it was like a really high return. And this gentleman was like, oh my gosh, when he did the math, back of the envelope, he's like, oh my gosh, he put all his 4 million into this thing. Unfortunately, like a year and a half later, he was part of the people on Kiambu Road queuing at DCI.
Wow.
To make a report about this certain sacco that went under, and he lost all his money. So that's why we have those 3 baskets, or those 3 ways of investing, because you can't put all your eggs in one basket. It doesn't matter. Life happens. COVID can come and wipe things out, and your whole business can crumble. I mean, there's countries like South Africa where I think it was for 600 days there was a lockdown, and businesses went under. And so you have to find a way to invest your money so that then when things don't work out, you have some money available. Okay, so security basket.
Okay.
What are we talking about there? It's, for example, you need to have a pension. I need insurance for healthcare. It's not an investment, but it's a risk management tool, and it is extremely important.
Wow.
I need to make sure I have insurance for my life, especially if I'm a single parent or a single earning person, or me in my family. If I don't have an income, it significantly affects the stability of my family. I need to have some kind of life insurance. Or I could decide, you know what, let me get an education policy if you want to go that way. But life insurance is good enough. You can decide, I'll get life insurance that then sorts out my family should things not go well. All those things are security basket. Emergency fund. So if you save money in a money market fund for emergencies, that's in your security basket. You decide, I'm a professional in HR, and I want to get another course to give me either job security or give me an opportunity to get a higher position or higher pay. That's in your security basket. It's an investment in your personal development.
This is so good.
Yeah.
Makes sense. Yeah.
So that's there.
Yeah.
That's physiological needs. We are still down here.
Still.
So now what you find, guys say, I've invested 10 million. In fact, all the money I have is probably maybe a 30-year-old. I have 10 million in my money market fund. Oh, money market. Okay, great, but 8-10%, it doesn't get you there because it's
your security is sorted.
Your security is sorted, but you need to do more.
Yes, I get what you mean.
So shall we go to the next level?
Wait, I've had this from individuals. As companies, as corporates, beyond individuals, is there a way that they should also invest in security funds?
As corporate, yeah. So you mean as a company, as a business?
Yes.
Yes. So as a business.
Again, I'm asking this with the understanding that Oak Special Fund has got individual accounts,
Yes.
joint accounts, so that's family or even with siblings or whatever it may be. It's got corporate accounts.
Yes, we do.
So they, as a corporate, how does the security fund look for me?
So as a corporate, you want to have cash that is available to you for your day-to-day running. And sometimes you have reserves, right? You have some excess cash. You don't want to just have that cash in a current account. You can decide, okay, I can put this money away for a month, or I can put this money away for a year. And so how can I maximize my year from a return perspective, but also make sure it's safe? So you could decide, you know what, let me put it in a treasury bill. Treasury bill, by the way, is also security basket. Okay. I can put it in a treasury bill. In 3 months, I'll get my money back. Or you could decide, let me sign up for what we call a call deposit with a bank. And the call deposit is where you sign up for an account where it is interest earning. So you move your money from the current account to a call deposit, negotiate a good rate for yourself, for the business, and then you're able to earn something. You could decide to put it in a money market fund, or you could even decide, if you have the money for a long period of time, to put it in a special fund and earn more. But now you have to think about your level of risk and ability to take risk. And so for business, if it's money for your day-to-day running, I would go with the shorter period opportunities. So call deposits, money market funds.
Quick liquidity.
Quick liquidity. A treasury bill is only if you know for a fact that you will only need your money after
a given period.
Yes, after a given period. Because treasury bills are 3 months, 6 months, 1 year.
Yeah. And even longer.
No, it's the 3 months, 6 months,
bonds.
1 year. Bonds are the ones that that are longer.
Okay. So what I'm also hearing about the security basket, the return is it's not astronomical. So you're not going to get.
That's a great point.
Yeah.
Your goal is not returns. Your goal is protection.